Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Dun, dun, dun. It's Thursday. It's actually a nice sunny day here in Vancouver. You can definitely feel fall in the air, though. So I hope you're all doing well. We've got another action-packed episode. Got to give a quick shout-out to Bart and Alex for knocking the cover off the ball yesterday. Great presentation. Gave us lots of stuff to chew on there. Thank you very much, peoples. And we have the bear in the house this morning. So we have an action-packed episode here for you with Thomas, the awesome monster trader. How you doing this morning, sir?
Monster.
He's ready to rock and roll. Sounds like he's in a good mood. And, of course, the mayor of the Vienna, Mad Dog himself, the Baroness. How you doing, sir?
Can't complain.
All right. Just an FYI, Julian's been asking us, and I see Albert's here. Albert, actually, maybe I might as well give you a shout-out. How you doing this morning, Albert? Our newest member of the TRI team. Do you have a microphone? Maybe he does, maybe he doesn't. I don't know. No microphone from Albert. All right. Well, anyway, the point here is Albert is, I actually don't right now. Okay. There you go. I caught you off guard. If you pop into the lounge, you never know when Brian's going to give you a shout out through these daily briefs. So anyway, Albert is our sort of newest team member of the TRI family. And he is going to be working away on the marketing side of the site. And sort of just a heads up, as I said just a moment ago, Julian and Siord and all putting together the new Facebook pages and all that kind of stuff. Alex graciously offered to sort of walk through how to sort of like and subscribe and all that kind of stuff on Facebook. So we'll look forward to that in the coming episodes. A little bit short notice for him this morning, but nonetheless, great to see sort of the marketing arm of TRI is getting up and running, and we'll do all the social media and all that kind of fun stuff. Had a great level 2 class yesterday, a group tutorial session. The boys put me to work, a couple hours of straight questions, grinding. But wanted to give a shout out. Thank you to Raf and to James for my awesome TAs. And Alex, I see you down there, TA for the level 1 program, working with Grim, and a current level 2 student. And I think he's very happy with everything that he's been doing on the site. Usually when we have the bear on the house, I actually like to download the sort of day's itinerary onto him. So, Mr. Bear, where are we going today? What do you want to start with?
Well, it looks like we're getting a pullback in the stock market, and it's looking interesting. Brian and I were talking before we started the broadcast here on S&P that we actually look like we're putting in a market structure top with a potential divergence that's very close to confirming alongside Willie being stupid. And I would love to show you that, but TradingView is not. There it goes. Okay, so here you see divergence, potential, confirmed below here. Once this thing fires with the market structure top, this is my bread and butter for a trade on the short side. So I'll be targeting probably a 38.2 test, and that's down around here at 27.96. So you got about 100 points to the downside, maybe 108 points to the downside. And that would make sense because we've kind of consolidated in this area here. You can see this was kind of like the past area of support. And really, this is the first time we've had clear market structure. Now, have to be careful. This is not confirmed, and we do have to wait. Unfortunately, according to the way I trade, I have to wait until Friday's close. Now, that could change if this thing dumps really, really hard here and somehow this becomes 90% or so of the candle downward, then it's really going to be panicky. But essentially, I have to wait for Friday's close and a close below the neckline here for my trade to take place. But it's forming. I don't know if it's confirmed just yet, but it's getting close. And these headlines are certainly starting to grab attention. It's just incredible to see, you know, one day from the next, bull market. It's a historic day on the Dow. It's a historic day for the US economy. Everything's going to new highs. Everything's great. And then today it's like, oh shit, the Dow tumbles 200 points, the NASDAQ's selling off, government bond yields are surging. And it's like, oh no, what's going on? Nothing's actually as good as we thought it was. And this is like, it's like the what do you call it, Brian? Like the dog and pony show or something?
Yeah, okay, sure. We used to that was when people were shilling paper financings and stuff. We used to always say that you could always judge the quality of the financing by the food that they served at the presentations. So if they're handing out bologna sandwiches right now, that's not good.
Yeah. I mean,
what I just noticed, just quick boo on my screen, Sjord is working out like a dog trying to build our M and W detectors, and just the prettiest example of a RSI divergence here on the S&P 500. So I could definitely understand this sort of anecdotal evidence that maybe a top is due. Frankly speaking, I didn't think it was going to be this well defined, but wow, what a beautiful example. And even for our level oneers, we teach you when you're using these momentum price oscillators, really watch that 50 line. And so, usually the 50 line will simply tell you whether the market feels like it's in a bull or a bear. And it's fascinating how we're just flirting with losing that 50 line on this RSI right now. And awfully pretty M. And I actually was joking with one of our alumni, JC. Were you in the education program with JC, Thomas?
Yeah, Australian JC, right?
Yeah, that's right. Well, he's British, but he lives in Australia. But anyway, he and I were joking this morning on Twitter, back and forth, where like I jokingly, I even put out this morning that obviously the beginning of the day, you don't know whether the New York kill zone, it's a trap. And I think Thomas mentioned this. I mean, we could very easily bottom here and then finish the day with a green candle. You don't know what the fuck's going to happen here. But I thought it was just really interesting that we're starting to get like empire patterns on things like the Dow up top here. And he and I were joking back and forth about getting short. So, what's so cool is our alumni, we build really good traders here. That's what I love about this site is this shit works, people. All right, didn't mean to get off on a tangent there. I apologize. Just really, really good example of an RSI divergence here. And, of course, a nice big fat M. And, if we do close below here, then I would imagine Mr. Bear is going to get super excited. But let's see what happens through the day. And, of course, I can't speak for him. So, I don't know. Is there, one other thing that I would just throw in that I found quite shocking, but it's probably a really good lesson for new people to trading is, I don't know whether I might have gotten rid of it, but I tweeted out a really cool correlation study of the Canadian stock market and how the Canadian real estate market is affected by U.S. long rates. And I've seen this happen before. And here it is here. Really good example where, U.S. interest rates are going to greatly affect other parts of the world. And I've been sort of arguing for quite a while that the Canadian real estate market is just, it's a disaster waiting to happen. And you can see how, the crank up in U.S. long rates, it's starting to take its toll on Canadian real estate. This is a Canadian REIT. So, and somebody in this morning had asked, what is the effect? Why are you so bearish on the Canadian banks? Well, you just have to understand that in Canada, unlike the United States, in Canada, the mortgage market, the housing market, we have a very sheltered banking system. You could call it an oligopoly. Maybe Google that word later on to learn what oligopolies are. But in essence, there's only about 5 or 6 institutions that basically control the entire Canadian mortgage market. And those are these chartered banks. And so, I showed you the Canadian real estate REIT index. So here's sort of the Canadian real estate investing companies, and you can see they're just in free fall right now. And if we look at the Canadian banks, you see just about exactly the same thing. Do I have? Thought I had CIBC on my screen here somewhere. Well, maybe not. Oh well. Oh yeah, here it is. And I've been talking to you guys about how I wanted to be short this goddamn bank, and you can see it's just coming off like a rocket here. So it did leave a pretty noticeable gap. Maybe we sort of find our footing at like 38.2s, rally back up to fill in this gap, and then I'll go look at the options again. But at this point, they were just too expensive for me. So hopefully that helps whoever was asking this morning, why are you so bearish of the Canadian banks? Well, the long and short of it is they have a lot of mortgage market exposure, and interest rates are going up. There's no doubt about it. We've gone through that 17.5-year pivot. I thought maybe there was going to be one more test of the highs, but gee whiz, these bonds have just fallen right out of bed here. Okay, wow, Brian, shut the hell up. Thomas, where do we want to go next?
Before we move from S&P, I just want to make mention that we've kind of heard that the market current day's S&P market is very analogous to kind of 2070, and I just wanted to show what 2007 looked like. This is the same week we're in. This is October, the first week of October on the S&P. You can see we continue to make new highs, and then we form this divergence down here, put in a market structure top. You can see we really didn't do anything but kind of slowly slide down into 2008 when the financial crisis arrived, and then we really started to accelerate to the downside. So I'm kind of wondering, and this isn't my kind of original. This is something I picked up from the Macro Voices guys and a couple of other bloggers that I follow, and it's actually really interesting to bring up this chart and to see that there is strong correlation between what's going on today and what's going on back in 2007. So if this does play out similarly with the same roadmap, you can kind of get an idea of how this market's going to look over the next year or so. So
yeah, can you do me a favor and change that to a weekly price chart?
All right.
And try and stay on the same time frame there. Yeah. So can you see where the 13 EMA crossed the 30 SMA there?
Yep, that
was just the most monstrous sell signal. And I actually blogged that out and I tweeted it and all that. And when that market broke there, and I think it was the first quarter of 2008, I guess, when the market officially broke there, nobody was expecting the market to melt down the way it is. So yeah, I do remember I was listening to that Macro Voices presentation from last Thursday, and he made reference again. He thought that this looked very much like 2007 versus 2008. And frankly speaking, I think I got to agree with that. See a lot of similarities. I mean, the problem, of course, is when the stock market is tanking and melting down, usually that's after the fact. Lehman Brothers is going under, all that kind of crap. We don't have that talk yet, and that makes sense, right? Because the markets, they're pushing it to new highs. But my hunch is the disaster that will actually bring this market down is in the process of forming right now. And I guess the question we'd have to ask is, who's got their nuts in the ringer? And again, I got a funny feeling. And actually, this is very similar to what the Macro Voices guy said, is I don't necessarily think it's going to be an internal U.S. crisis that brings the market down. I think this actually starts overseas. And, something like Italy and stuff, the writing is on the wall, right? And the central banker, Draghi, is leaving this year, isn't he? Mm-hmm. And they always say that whenever you have a new Fed governor, or, in this case, ECB, the market is going to test that person. So you can start, this should be a good assignment for all of us here at TRI, is let's keep our, ear to the ground. In 2007, 2008, there was lots of warning about the problems coming down the road. So, over the next 6 months, this is going to be where TRIers, if we pay attention, we should be quite clearly given what the reasons this market's going to fall apart are. It's just that nobody ever listens before the fact. It's only after the market breaks that people are like, oh, yeah, sort of stuff. So. All right, got a whole bunch of bobbleheads there. What are you looking at there?
It looks like Draghi's term ends October 2019, and there was an article in 2017 that said they were supposed to name his successor at some point this year. They haven't done that just yet. Obviously, that would have made headlines. These are all the people that would be potential replacements for him. I'm not an EU kind of watcher of these names, so I don't know any of these guys. But it'll be interesting to see how this unfolds and who gets named, what their policy is. I really hope it's not Christine Lagarde. That's all I can comment about that.
Well, to be honest with you, I just honestly hope it isn't. No offense. Where's Axel? Is Axel even here today? No offense to you Germans. But I really hope for Europe's sake it's not a German who's put in there, or all hell is going to break loose. But because they're like total austerity, right? Yeah. But anyway, only time will tell. Really good analogy there of 2007. And I think Thomas basically has it. We're very close. We don't have the market officially breaking here, but we're very, very close. All right. Do we want to talk a little currencies this morning?
I mean, there's nothing really popping out. I just want to briefly touch on it because I have a lot of news going on in the crypto space that I want to have time to cover, and it's a lot more than normal. Okay. But as far as dollars concerned, it looks like we're still breaking bullishly on the dollar. And at the same time, gold's holding its ground, which I found really interesting. If we switch this dollar chart to a daily, you take a look here. This kind of looks pretty definitively bullish. Now, this has taken off a little too quickly, and I kind of like shorts at this point. Once we rally into 78.6 or even test 88.6, this is just getting a little too far, a little too fast, and I would see pullbacks down in the 95 area. And when that happens, I think gold and silver will get their pop, because I do find it fascinating to see this, that gold is still hovering in the 1200 range, despite the dollar going up half all the way to 95.5, and it's just still stuck in this channel. So this is commentary that Brian had mentioned on Monday, that is it really a good idea to be a gold bear at this point when we've kind of broken so far down and gone so far. It almost makes it seem like a counter trend rally would be more reasonable as the dollar pulls back a little bit, and that might actually give me my entry on this silver trade to the long side. So I'm going to be eyeing this again over the next couple days, probably into next week as that unfolds. And then, of course, the goddamn VIX takes off. This stupid candle goes into the gap, tails are down in here, and then it's like, oh, hello, and there you go. I'm locked out of my trade again on the VIX, but I don't know. There was some commentary about whether or not the VIX is actually liquid, and if you do have a nice position call-wise on the VIX, which kind of insinuates that the broader market is selling off, that the liquidity to actually sell your position at a premium may not actually be there because the people responsible for the spreads aren't actively maintaining them as they once were. So I thought that was fascinating commentary. If you do nail this market and you end up pulling off a double or a triple, the spread may be so wide that it doesn't actually get you that high. I need to keep watching these spreads because I've actually noticed I've noticed it happening over the last couple of months, just, slight variations in spreads and things just not correlating properly. And there was actually a lawsuit filed against the CBOE on this volatility index that they'd been screwing around with it. And you can actually dig up some of those articles on Zero Hedge and on Google. So this is kind of getting fishy. It goes back to February when they broke the other volatility indexes. I wouldn't be shocked if this thing broke and got wrecked and a whole bunch of funds that are in here can't actually pull their money out or actually cash in on anything that they did to hedge their risk, that this whole thing was just what, how do you call it? Kind of like smoke and mirrors, where this really is useless.
Right? Fugazi?
Yeah, sure, for Casey. So I'd be really careful if you're putting serious money into this, that the liquidity may just not be there to get you out of the position.
I think also too, this is a really, really good commentary on trading derivatives. There was somebody in the lounge, I can't remember who it was, who was asking me, Brian, I want to get involved in options. I want to get trading options. And I was like, you have to be damn careful with these things. The sad part about this volatility index is there is really no sort of benchmark that this thing actually has intrinsic value based off of. It's just a derivative. And then on top of that, if you're playing options on this derivative, that's a derivative on a derivative. And if the option boys, the market makers, want to fuck around with you, they've got carte blanche. So just really, really good warning. You should only take options trades when all the stars align, because they can be extremely dangerous. And if anything, I think what I'm seeing on your chart there is almost looks like this could turn into like a Joby gap, eh? I tell you, man, this stock market could come off a big chunk here. Everything seems to be just all ready for this thing to just crap out. So good thing is I still have my little insurance policy on, so I'm feeling relatively comfortable through this. And what I actually find really interesting is that even through this broader market malaise, I can't get filled on my bids. Nobody's selling the stock that I want to buy, which pisses me off. So, I'm working a bid on my blockchain stock, no fill there, working a bid on uranium, Alex's presentation yesterday. I think we all should just go and do a little bit of shopping within the uranium space. And I had even a couple ideas. I'm very interested in this Big Rock Brewery stock. Can't get a bid there filled. Really interested in this Orestone Mining weekly VCIM stock. And nobody's interested in selling this. Come on. Oh, I might have gotten a fill here. So we'll see. I'll check my Timberline. I might have gotten a fill down here on this one. But I just found it interesting, and this sometimes happens, right? If you're doing VCIM and you're doing like value names and stuff, sometimes the stock market will sell off and it'll be like, oh, the end of the world's coming, and you can't get a bid filled on these stocks that you want to get in. So go figure. All right, so I think we've talked lots about stock market today. Do we want to make our big transition over to crypto? You said you got a lot to talk about there.
Yes, let's do that. I'm loading up some articles, so I don't know if we want to have the sound
maybe
bite.
Alex, while Thomas is loading the articles, do you want to give Mickey Mix little sound bite a feed here?
Yep, and here we go.
Crypto tastes great. Crypto can't wait.
All right. So is that enough time for you, Thomas? We're still looking at the white screen of death. Do you guys remember the blue screen of death? Does anybody remember that?
God, I used to break my computer on purpose just so I could get on the phone with Gateway tech support so they could walk me through how to load MS-DOS mode and get my computer back running.
You guys remember Gateway? God, I remember that. That's forever ago. Anyway, all right. So where do you want to begin here today?
I mean, I don't have this article up, but I just wanted to say that Mike Novogratz is at it again, and he's saying he doesn't think Bitcoin's going to reach 9,000 by the end of the year. So I just wish he'd stop with this stuff. It's kind of playing with everybody's heads. But either way, there's some...
He's pulled back all his sort of bullish calls, right?
I guess. I mean, why do you need to do that in the first place? You've got a fund, whatever. He's got his own agenda. I don't.
Yeah.
It's different than mine.
Well, I really like that Thomas Lee guy because the message is always the same. This is fundamentals, blah, 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 blah. But Mr. Novogratz and Mr. Penis Eater and stuff like that, that's a really good comment Thomas makes is, you always have to ask yourself, now, what's the motivation behind this guy doing this? What is he trying to achieve? So, yeah, good point, sir. All right, I'll shut up. I want to hear what's on your mind. Go for it.
All right, there's lots going on today. I don't know why all this stuff caught my attention today, but essentially there's really good news coming out of, there's a CFTC FinTech conference in DC. They've talked a lot about cryptocurrencies. And at the same time, out of the district court in Massachusetts, the CFTC has basically been awarded, I mean, not awarded, but cryptocurrencies has basically been classified as a commodity. And this has officially been declared. So all of cryptocurrencies basically fall under CFTC jurisdiction in the United States. So that means SEC is only going to be prosecuting things like, ICOs and other potential fraud cases where the SEC would normally get involved in any other sector, not just specifically trying to target cryptocurrencies and protecting the poor little public from losing their paychecks every week. Maybe the SEC should be pointing their fingers at casinos instead. But anyway, point being is that this has implications for taxes. This has implications for how you run your business. This now has given clear direction for how we can operate here in the US now that these have been considered commodities. So I'm personally really happy to see this finally being declared. And the fact is, you've got this guy, Giancarlo, who's pretty much like the Bitcoin dad, right? Remember about this time last year, everyone was very bullish when he came on and was very pro Bitcoin. I like this guy. I think he's very smart. He handles himself really well for a government spokesperson. And frankly speaking, what he has to say when it comes to Bitcoin is nothing but positive for the space. So hopefully, with a guy like him kind of driving the bus at CFTC, that he has the best interest for the United States to kind of keep the US sort of as an innovator and sort of as at least in the forefront of innovation and not being left behind as other countries put in place legislation that are pro cryptocurrencies and allow money to flow into their economies. So again, really great news here. And there's more stuff coming out of this FinTech conference. I think they go until tomorrow. And he's already spoken to CNBC. If you haven't seen this interview yet, I highly suggest that you watch it. It's between Giancarlo and this guy, Bob Pisani, on CNBC. And Bob Pisani basically asked him, how do you feel about the United States being left behind? And why isn't the US doing anything to kind of keep up with the rest of the countries? And he said, well, listen, we launched the first futures product here in the US with the CBOE. And while many of us don't even use those, the fact is that there's going to be other products coming out. Like next month is this Bakkt product where you can buy cryptocurrencies through this exchange. Granted, you have to be a pretty big player, as the minimum block you can buy in is at $200,000. But the point is that that's going to launch next month. There's going to be the ability for big money to flow into this space. And it's not through the traditional ETF that everybody thought it was. And I really don't think people are putting enough emphasis on how important that is. Now, again, this goes kind of back toward the dangerous zone of whether or not the Bakkt will be able to issue these using real physically tracked Bitcoin, or whether they're going to, I mean, they're supposed to, but whether or not they're going to also use the paper settlements that the equity market has kind of been plagued and forced to use that really hasn't been accurate. But either way, I think that's going to funnel a lot of potential money into the space. And it launches, I think, at the beginning of November. So that's less than a month away. So I think that's extremely bullish. All this news coming out today is really bullish, just those two articles themselves. So I'm going to leave that behind, and I'm going to move on to Tether. So it looks like there were some issues today that Noble Bank lost Bitfinex and Tether as clients, and evidently the premium in Tether has increased. Now, I'm a little confused by this article because it seems a little opposite to what you'd expect, but Tether essentially broke down to about 95 cents. It's supposed to hold a 1-to-1 peg, and right now it's kind of recovered just a little bit, but the current gap is about $55 premium, and they're calling that a 9-month high. So there's a lot of controversy going on because evidently there were some strange patterns going on Kraken, and they kind of refuted that it was just simple nonsense going on. But this article talks a little bit more about what's going on in Puerto Rico with Noble Bank, and they're just trying to find new services. I don't know if that's because Noble is dropping them or if Tether and Finex are dropping them, but something's going on here, and it's just the same old annoying story with Tether and whether or not this is actually a stable coin and whether or not this is actually good for the industry. But I think as these other products come online, you're going to see a lot less emphasis on Tether, because for a while that was really the only way you could bring big money into the space. Now there's other on-ramps, so that's really good sign here. And frankly speaking, I'd love to see Tether just disappear from the space. I think it's kind of a nasty, negative stain on the whole space that really just doesn't need to be here anymore. And yeah, so again, that would be great to see vanish. And I think there was one more thing that I wanted to cover here, which is just kind of how these premiums have performed in the past. And you can see that it's been wonky. Really, really screwed up. So that's Tether news. The next thing, this is a little more old news from, I think, yesterday, but this was picked up that Polo, and this really isn't surprising, right? So once Goldman picked up Circle and Circle picked up Polo, basically what happened here is they've decided to take off margin trading for US customers, which really, I mean, is that really a surprise? Because margin trading for traditional retail investors just is not something that's looked favorably by regulators. So it would make sense that they would take this off. Now, in addition to removing margin trading for US-based investors, they're also taking off 3 coins here, which are Cinero, Expanse, and Gnosis. So those 2 are planned to be delisted on Wednesday. There are a whole lot of delistings going on over the last couple weeks and months. I'm going to, again, if you haven't checked out Bittrex, there's a bunch of names being delisted on there as well. So that's covered. The next article that I found really fascinating is something out of Thailand. And I think this is the first time I've seen a money transmitter. So there's a company by the name of Super Rich in Thailand, where if you go to Thailand and you need a whole bunch of Thai baht in cash, essentially what you do is you go to these money exchangers. It's kind of like TravelX, those huge rip-off places that you go to the airports. Let's say you're Canadian, you're coming into the United States, you need some US dollars, you fly into the airport, you go to the kiosk, and they're like, oh yeah, you give us 100 Canadian dollars, we'll give you like 50 US dollars. And they just gouge the crap out of you on the exchange rates. And it's just, if you don't already know, just don't do it. Don't ever exchange your money at these US-based places or even in Europe, because they just take so much money. Now, the flip side to that is this place, Super Rich, and all these other money transmitters / money converters in Thailand. I was there last year, and they're incredibly affordable. They take very low fees, and it was great. I was so shocked to see how close they work to the actual exchange rate, that it was just really refreshing to see after traveling through the US and into Europe and trying to exchange through those money transmitters. But essentially what's happening here is this company, Super Rich, wants to integrate cryptocurrencies into its business plan, in that let's say you have $100 and you want to go up to one of these kiosks and exchange $100 for Thai baht. Well, you give them $100, they give you the cash back in Thai baht. Well, they want to now be that same company for cryptocurrency. So you just walk up to the kiosk, you say, I've got 1 Bitcoin, how many Thai baht can I get? You send them the Bitcoin, and I think they give you the cash. And I think that would be really, really awesome to be able to do something like that. Correct me if I'm wrong, but I think that would be one of the first kind of companies like this, one of the first money transmitters to be able to do something like this. And I think they have far reaches into the Thai government, because I remember seeing Thailand was on the fence about cryptocurrencies, whether or not they were illegal, whether or not they were going to let the banks handle them. I think the banks themselves have been a little bit hesitant because they don't have clear direction. But I do believe, and from what I read, Super Rich kind of has some contacts or some relationship with the with some high up royalty in Thailand, with regulators. They obviously have to do this under the supervision of Thailand Securities and Exchange Commission. But from what I'm seeing, they're very close to approving something like that. I think that would be a huge leap forward for Bitcoin. I mean, I would love to just travel somewhere, not have to worry about taking cash with me, just have, whatever on my phone, show up there, flash them a QR code, and boom, I've got cash. I mean, that's like a dream to have something like that in place. Would be fantastic. So that's really, really cool news for a guy like me, or for anyone who likes to travel and, you don't want to be using your credit cards. It's just some of these shady places that take them away from you and disappear into the back. So that would be cool. Next article here is so the popular crypto exchange BitThumb out of Korea is now kind of joining the party, and they want to be listing or launching their own decentralized exchange in 2019. I think this is a pipe dream for a lot of these places. Whether or not they can actually get this thing going in 2019 will be probably one of the biggest hurdles for many of these exchanges. I know there's a couple that have one operating right now. I think the problem for these exchanges is they're just making so much money on these fees that they're really not incentivized to launch a decentralized exchange, because it's hard for them to collect the fees. So what they'd have to do is kind of hard code smart contracts into whatever trades are done through the decentralized exchange and collect the fees that way. I don't think that these exchanges are fully prepared to do something like that. And I don't think don't get me wrong, there's a big need for this, but I don't think it's as big and necessary that these exchanges are just kind of running to getting this thing launched. But nonetheless, in a few years from now, this will almost be a requirement, because by that time, KYC and every government in the world is going to be breathing down every exchange's neck, and therefore retail will be like, listen, I don't want to send you a video of myself naked in my swimming pool holding my passport so you can verify who I am. I mean, it's getting really ridiculous for some of the KYC procedures, and decentralized exchanges would essentially get rid of that. And there's really nothing regulators would be able to do to prevent something like that. I think that's kind of the theory at this point. So decentralized exchanges are pretty much the question. One more cool thing that I saw was Wall Street Journal launched their own coin here, and they did a 30-minute kind of documentary on how they did that. There was a guy that traveled to Japan. He met up with a 21-year-old guy who essentially dropped out of university to go into the ICO space, go into cryptocurrencies, launching his own. And I haven't watched it, but this is like on my to watch list today, because I think it'd be fascinating just to see how this whole process works. But this guy traveled to Japan, got this thing coded. He essentially made 8.4 billion of these coins, and he decided that he wanted to make each coin divisible by 8, not by 8, but by 2, because he claimed that people are just used to dollars and cents, that it would be a lot easier for people to keep track of it. He launched this thing, he made physical coins that he distributed at Wall Street Journal's annual tech conference. And I thought it was hilarious that Neil Lipschitz is the overseer of the ethics and standards at Wall Street Journal. And he said this to the article. He said, "We're not in the business of getting in the cryptocurrency world. We're here to report it and explain it, just like we report on banks. We don't go out and start a bank. We're not going to create a currency." So, I mean, I think the guy missed the point of what the author was trying to do here. But I mean, this 30-minute video here has got to be really cool to watch, because I'd love to see the process of how stuff like this works. And I'm going to post this in the lounge for everybody to take a peek at if you are interested in doing that. But I think that covers most of the main news that I picked up here on the scanners. Lots of cool stuff going on, neato kind of stuff, and that kind of transitions us into taking a peek at technicals. I think I've talked for a really long time. Brian, do you want me to to jump into technicals, I saw last night you were getting pretty excited about a Leanne James setup on Bitcoin here. Is that still going on?
Yeah, I mean, I was just pleased to finally see W's, and what was really cool was to watch the W come in through the reload zone. I mean, it's just about everything that we teach on this site. I was also pleased to see that it came in on volume, and I have a funny feeling that this move happened in conjunction with the stock market's breaking. Like what you see happening in the stock market today, I think it actually started in Asia last night, and this breakout on Bitcoin, it was so cool. I was sitting in the lounge last night and I saw this railroad tracks come in here off of this low, and I was like, damn, that's a stone cold honky. And I watched it run up, and I painted this, basically the Leanne James setup is just simply draw your trend line off of resistance and sort of the first market structure signal on the other side of the trend line is going to be your trade. I suppose you could argue that really here is sort of the bottom, and the railroad tracks sort of validated that that is the bottom. If anything, probably what I'm seeing out of the short term is probably, and the LJ just simply says, you know, what's a 2-to-1? And off of this level at 2-to-1, you'll notice is just nothing more than a test of these old highs. And I also really like the idea of using the bot trade metrics to try and help you manage the trade while you're in it. So you saw that move stop to scratch was hit just on that initial burst. And it's interesting how the market came right down, sort of played with this support, and now we're trying to turn back up here. So frankly speaking, I have no idea. And of course, if somebody comes out in the US Fed or something and says, we'll give you all the liquidity you want, the problem's really not that bad in the market, and the stock market finds some stability, my hunch is this thing will probably lose this level and head back down. So, you know, that setup, if you wanted to play the trend line break, I think it gave us long signals, and those people that are playing ranges, you know, anybody who said that yesterday, Brian, I absolutely love buying 78.6s and just risking the new lows. They got an absolute gift here the other day. If you're like, well, I want to see, you know, anecdotal evidence of some sort of bottom, and, you know, you could argue this is a little mini reload zone in the railroad tracks, then the W's coming in. So I can make sense that people that were hunting longs actually are getting signals here. I suppose, you know, if we, you know, looked at this price pattern in earnest and sort of zoomed in, I think we can make the argument that maybe there's, you know, like this is the classic sort of day trading crude oil bot setup that I would be hunting, where I'm just going to simply take the high back down to the low, and then throw on the bot levels. There's 33, there's 66. And we'd like to really ideally, and maybe we'll put on our squiggly line theory for this. You know, I'd like to see some nice structure come in here. And then usually what I see happen, and if you think of sort of like Wyckoff and that kind of stuff, usually markets don't really move in just sort of one step. Usually there's like multiple steps involved. So, you know, how does this market sort of stair step its way higher? Let's just quickly throw this on here. You can see the bot's next sort of trade setup is going to be on a move through 66.16, basically taking out this sort of railroad tracks high here. I think it's probably a little bit early to be hunting this next long setup here, bot sort of setups for the next leg higher. I think you still probably got to let this thing simmer a little bit. And then, of course, you know, as I said, if we break back below this this original breakout high here, I think it means that stock market people are feeling a little bit happier. And, you know, those people that did play the simple momentum move, they probably ought to hop off. So let's see how this develops. There's a really interesting battle going on here. I think it's still a bit early to set up the next trade. But, you know, anybody who was hunting this reload zone last night, and it was like through the Asian session, I think they got an absolute gift here. And really, the issue here is, of course, you never know. I mean, nobody does. And you just have to build your plan. I think we have in the library, reload zone within reload zone. So, that's a perfectly valid setup there, right? And especially that railroad track reversal. If I heard any of you guys say, yeah, well, Brian, I took the long off a mountain here on this resolution of this railroad tracks, I would have been more than happy, right? Great trade, great trade. Coming in here and actually hunting a trade right now, I think that's a little suspect. If we crap out here, like I said just a moment ago, I think, there is a bit of room to explore back down against these lows. And if I was going to be hunting a continuation of this move, I'd want to see a bit more structure here. The only other thing that I would add to this sort of Bitcoin analysis just in the short term is noticing that the, Alex's tool, the spread between Phoenix and Stamp, just keeps surging here. So that implies bullishness for Bitcoin. And then also what I noticed off of Thomas's OKCoin forwards is they've actually gone and W'd here. So that's helping the Bitcoin story. And of course, if we can accept back above this zero line, then I think we're off to the races. Strap on your seatbelts, guys. Get ready for a big rally. So, things are looking optimistic. It looked a hell of a lot better than this time yesterday. I'll tell you that much, by crackers. So that's about all I have to say here. What are you seeing?
Yeah, I mean, I don't want to be I don't want to be a parrot, but I think you covered what's going on quite nicely here in Bitcoin on the lower time frames. The only thing I want to cover is the weekly, and the weekly is flirting so hard with the $6,000 level. And this goddamn trading view will not save the fact that I have switched these fibs to the other time frames.
Yeah, trading view.
You could just click on the eye there, and all those symbols are just coming off.
Click on the eye. Where the heck is the eye?
Where is that?
It's above the waste paper bin there. On the left hand.
Oh yeah, way over there.
Cool. Good secret. Thank you, Alex.
Awesome, Alex. Alex for the win. Sure, look at this little MACD weekly histogram on your chart.
Yeah, so this is a divergence that is certainly confirmed here on the MACD, and ooh, this is not pretty to see. So there you go. You can see the divergence confirmed above this line. It's a little weird looking, but it's there nonetheless. The fact is we haven't had a nice divergence to work with for a while on the weekly, practically since before the takeoff. And the problem is, do you see market structure? And the resounding answer is no market structure just yet. And from my point of view, the only way that this is going to turn into market structure is we need to kind of come down, retest this low 6,000 area, and then put in a W. I mean, if we W'd here, it would be a little premature. I mean, I might count it if it's next week's candle and it opens up here and we pop. Fine, that'd be great. The problem is the next W that I would need to see would be this big W right here, which is kind of like, oh, come on, go home. Yeah, because I started drawing. All right, so if you can follow my mouse here, it's from here. Here's the neckline in the middle at about, call it 9,000. And the fact is that the candle bodies are here. And we have to use, from my system at least, the candle bodies to the left. So the fact is, these candle bodies went lower than those candle bodies. So the point is that this is not the valid W from my point of view. The W is actually... Hang on, let me hide these things. The W is actually this big W here, not this W here. I will not count that because these candle bodies are below that. If you're a candle tail and wick person, then you can count these. So it just depends on the school of thought in which you are accustomed to trading. And for me, that's what I'm going to be looking for. But I just want to see a weekly W. Just please give me give me a bottom. I want to see some booty. And it's, you just got to be patient.
Somebody get that soundbite?
Now, as far as the daily's concerned, I think we're in a really, really dangerous looking area. I mean, the fact is this could turn into an M or a W, whichever way the wind blows. Brian covered his squiggly line theory. I have no trade, so I'm not going to spend any more time talking about that. I mean, I guess the only thing I want to look at is these longs versus shorts because, and this is an article that I wasn't sure about how they figured this out, but essentially there is commentary from Twitter, from Mike Novogratz, from Tone Vase, and from somebody else. But essentially, they tweeted out that there are a resounding amount of shorts that are still in play and waiting to close out from the $10,000 area. And the tweet basically goes, are they going to close out when the price rallies to 7,500? Or are they going to close out as price goes down to 5,500? So the fact is, all these guys have picked up on the fact that people are still holding short positions here. And really, if you are short from $10,000, do you have a reason to close your short out yet? I mean, if you look at the daily and the weekly, I'd say, I don't really see it. So if I'm a shorter and I'm from 10,000 bucks, I'm still holding too. I'm probably, at this point, it's probably people who have the patience level of Grim, and they're just doing great through this period. So as far as longs and shorts are concerned, on Finex, there's no real clear direction here. It looks like the market's kind of confused. Longs have come off, shorts are kind of coming off too. So it just, for me, it's hands off, and that kind of makes sense because a lot of other participants look like they're lost as well. Now, my favorite play on trading Bitcoin, for whatever reason, has been Ethereum. Ethereum's just set up so nicely. I left you guys on Tuesday in a short from Sunday evening, and it took me until about, I guess it was Tuesday at about 3 in the morning Eastern time when price finally decided to dump into a mountain man level. And I commented that I could see price coming down to about, mountain man down to 78.6. And if I can get this thing to, I need to switch browsers. I think Chrome has just gotten so much worse since this update and since they force you to log in. This thing is a resource whore right now. I'm really not happy with this thing. So anyway,
I second that motion. I think Chrome is
are you
killing
noticing
the business.
Are you noticing it slowing down your computer?
I absolutely dislike what they've done with this browser. It's awful.
Yeah,
anyway,
I think Vitalik said that Firefox.
I don't know. Maybe we should use that. It doesn't doesn't the Brave coin guys, don't they have a browser or something that they like people using?
Could be. So
anyway, sorry to interrupt, but I just had to second that motion. I am not impressed with Chrome these days at all.
Yeah, sucks. Okay, so 4-hour trade on Ethereum came in. We had this 4-hour divergence come in. And this thing just went on for freaking ever, just kind of going, am I going to dump? It was like this slow drip of death. And really, when I see that, not only is it easy to stay in the trade, but at the same time, it produces anxiety because while you have your levels working as a Bitcoin bear trader who historically, I'm not in positions for more than a day where I see price. Once my setups fire, I'm like in and out within, call it 6 to 8 hours realistically. And when price takes longer than 6 to 8 hours to give me my target and it just kind of goes off sideways, then I know that the thing's not going to come in and I'm probably going to get stopped out or it's not going to hit my target. Either way, this was behaving differently. This slow grind of death that finally decided to dump into the overnight hours hit 61.8, and we tried really hard to break below it. But can you see, if you look left, the reason why we didn't go any further is there's a lot of traffic in this $215 area. There was a lot of interest buying up the 61.8 level. This was a key reversal in here, and we we just stopped on a dime, and we put in this W. We're flagging a little bit, maybe putting in a potential top or bottom. I don't know what it is just yet. I don't have a div or anything else to work with. So it's still sideways. Point being, no trade for me. And the one thing that I do want to check on is our Ethereum Bitcoin proxy and see what does that look like. Has this finally put in some real market structure for us to work with? And Come on, Chrome. I'm going to give you a spanking. Boy, I'm full of great sound bites today. I really hope no one's recording this crap. So look, so we've got our price chart here. I guess I called this goopy, or no, this is actually Brian's word, goopy price action. And that is what it looks like. And it looks kind of dangerous, right? So if you take this away, this looks like a potential top in the making. Market is in convergence, not necessarily divergence. So in my opinion, if we were to get a market structure top here, I don't think that the pullback will be pushing us to new lows, but there's always that possibility that this could set up here. But the point being is that we are consolidating off of this kind of neckline breakout. You can see this really sharp, steep incline of this W here. And that's where we're trying to bottom from. So if you are a Ethereum bull, you're going to want to be buying against lows here and hoping that this holds. Now, if that doesn't hold, you set your stops at the bottom end of these tails. You say, bye-bye, Mr. Ethereum, and you wait to rebuy, maybe back in these tails down here if it wants to come back down. So I think the price is desperately trying to kind of stick its fingernails into the cliff and hang on for dear life and try to crawl back up to the top. And it's in that process right now. So lots of sideways, lots of sort of insecurity as far as what the internals or what the market looks like. The market's like very unsure of itself, very sideways. I don't see a clear direction other than I am still slightly bullish on this market since last week as well. So I haven't changed that sentiment completely, but give me a bearish setup and I'll certainly start to become more bearish, and give me a bullish setup, I'll get way more bullish. So with that, I'm pretty much done. Brian covered Litecoin as a leading indicator, and to me, I think there's still no real trade here on Litecoin from the 4-hour. You can see that any potential there. And the market's just in convergence. So it's kind of good to see that, because the market's cleaning itself up after this 10-month, 11-month period of, oh my God, when is the carnage going to end? And maybe this takes until next week.
Are longs starting to come back into Litecoin there?
Yeah, there's a lot of longs in here, and I saw some articles saying that Litecoin was going to lead this market upward. And yeah, sure, we know Litecoin's a leading indicator, but I mean, I don't know. Has this really been that much different than it has been? Here you can see people squared up.
When it was that small image, it looked like there was a W on your longs, but I don't see it there. No.
Yeah, so nothing.
If anything, I'd even tweeted this out to John Bollinger because he was asking about leading indicators, and I said, "Look at that M in the longs and the W in the shorts on Litecoin." If anything, if there's a fly in the ointment, it's this silly Litecoin as our leading indicator is still not very happy.
The only thing I'll say about Litecoin is it looks like it's establishing a bottom a lot more tightly than any of the other names here. So this is kind of cool looking. That market structure bottom that is in play from, I think, the middle of September, it looks like. Down here, yeah, this tight little market structure confirmation. We're playing with that neckline. And you can see this is a divergence that hasn't yet confirmed itself and will confirm at the top of the neckline here. So once that happens, I think we might actually have our first sort of anecdotal evidence that, hey, maybe Litecoin is going to lead this market higher. But until that happens, you can't really do anything, because right now you've got a bearish divergence on the daily on Litecoin. So lots going on, lots of confusion. You can see why the market's so unsure of itself. And
yeah, I mean, this is awfully tough, folks, but this is more of wait for it, wait for it, wait for it.
Yeah, and don't force a trade, right? If you don't have any setups and you're just like, I really think this market's bullish, if it's not there, if there's no reason for a setup, don't do it. There's a reason why it's not there. Don't force yourself into trades, because you're going to end up losing money, and you're going to look back and you're going to be like, God, why the hell did I force the trade? And it's just like, I had a great tutorial, a couple tutorials yesterday with a couple of people, and we talked about emotions and how important it is to realize that if you don't have your technical reasons and you don't have your setups, just don't touch it. Don't front run it. Don't think the market's going to go one way and get married to that, because then you're going to poison yourself and you're going to force setups that really aren't valid. If they're not there, be hands off. That's almost the best kind of state to be in a position where you don't have anything. If you don't have anything, don't do anything. It's that simple. And with that,
sounds good to me. I think that's probably a great way to end this daily brief on, right? Yeah, I used to have a buddy of mine who used to always say, you cannot push a chain. It's impossible. Don't try. Just, if this is and if anything, that's the whole point of the whole M's and W's, is we just simply have to let the market tell us when to actually act. And, the irony of it all is I look at that Litecoin chart, and really it's right. There is a W there, and not a bad little risk window. So, if your setups are to hunt W's, then, I can definitely see the justification for it. And you just don't know. If anything, this is a good example. I'm playing this latest pivot in the market through my little Verge trade. And I just have my orders working. I'm going to risk against these lows. I've been slowly getting filled, and you can see the market's just going back and forth, back and forth. And really, I've got 3 of my 4 buy orders filled here. I have no idea if this trade's going to work or not, but I definitely think that this is a place where if I'm a risk taker, this is where I should be stepping in and taking my risk. But I don't know what's going to happen. I really don't. But, just build your plan. Don't put yourself into a position where you can't come back and play the game again tomorrow. Try and use all the tools that we teach you on the site, structure, location, divergence, all that kind of fun stuff, and just get out there and have some fun in the market. So on that note, I think we'll probably leave it at that for today, since it is past the top of the hour. Thank you so much for all the incredibly valuable information, Thomas, as always. Alex, is there anything else on the docket that we should talk about today?
No, we're good.
Send these people on their way. Pardon me?
I think we're good. A really good job, guys, as usual.
Okie dokie. All right, why don't we leave it at that? Thank you again, Thomas. Thank you, everybody, for participating. All the best, and the only thing left to say is bye for now.